Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading, and welcome to Daily FX Analysis. I'm a little bit hoarse this morning, guys. Don't know why, but there we go. I will work through it. Let's just start with economic calendar. 7th December, which is tomorrow. Nothing major today or yesterday, folks. So let's start with what will be later this evening for me. Reserve Bank of Australia interest rate decision, forecast 0.1, so they're not expected to do anything. GDP growth rate in Eurozone tomorrow, and Germany economic sentiment index. Balance of trade Canada, GDP growth annualized final for Japan, forecast minus 3.1. So obviously anything better than that could be good for the yen, folks. Bank of Canada interest rate decision, we don't have a forecast for that, guys, but that should be one worth keeping an eye on. On the 9th, then just not want to run ahead of myself, that'll be Thursday. We have inflation in China and Mexico, and then the 10th, that'll be Friday, which is inflation rate Germany, GDP 3-month average, and year-on-year out of the UK, core inflation and inflation in the United States. And then, as usual, on Friday afternoon, we finish with the Michigan consumer sentiment. So there you have it. There's a few interest rate decisions coming in there this week, few inflation and GDP. So there's a little bit to keep an eye on. The big problem at the moment, obviously, Omicron, but inflation's the big problem. Omicron's just another fly in the ointment, or a spanner in the works, guys. I don't think we're going to lock down the way we did last year. In fact, I know we're not going to lock down the way we did last year. We're still getting stories of mild cases coming out of South Africa. But we have to wait to see what the results are coming out of the UK to give us a better idea of Omicron. Reason being that in South Africa, the under 50s aren't vaccinated in any big way. And it's there that we're seeing the majority of the cases. So is Omicron doing what it's doing because the people aren't vaccinated? We don't know. The fact that the population's a lot younger than the UK population on average, is that the reason they're getting mild cases? We don't know. So until the UK becomes majority Omicron and not Delta, we're not really going. And I say the UK because the UK is very highly vaccinated, etc., etc. So it'll give us a good test ground for it. So we don't know yet whether there aren't any plans in the UK to lock down for Christmas. PCR tests and passes, I think they're going to try and bring in. Northern Ireland's full-blown do what you want, where you want, which is the reason I'm not going out anymore. Down to the shops with a mask on, and that's me, guys. Certainly not socialising, where bars at the moment are looking like they were before the pandemic, and yet in the Republic of Ireland they've shut down nightclubs, etc. And it's one island, guys, so the border isn't going to stop Omicron. So interesting to see how different societies are reacting to this. We'll have to see how it spreads. I suspect that it could be the tail end of. I could be wrong, guys, but I suspect that it could be the tail end of coronavirus as it mutates to become a endemic thing rather than a pandemic. In other words, seasonal flu's endemic. It comes around every year, kills a certain amount of people. Society accepts it and gets on with it. It's part of life. Just as getting in a vehicle is part of life, and many people are killed driving cars, but we still do it. So we'll have to see how that turns out. At the moment, stock markets have been, not at the moment today, but at the moment as in this month and last month, stock markets have been getting pounded. Stock prices have been getting pounded. And I was just sitting reflecting yesterday. I'm trying not to get annoyed about it, but there's always that thing in the back of your head that, yeah, we've drawn down X amount so far, but is this the start of a deeper drawdown? And it could possibly be. But I was reflecting yesterday on the fact that this time last year, or March last year, when the world economy was getting pounded, it didn't affect me. The only reason it affected me is I tried to jump into a few things, a few currencies too soon. I tried to get into oil just before it went to zero. But other than that, it didn't affect me. But this time round, I'm pretty heavily invested in stocks. So this is the first time that I'm being, my account's being affected. So it'll be interesting to see how I ride through that, whether I make the right decisions, the wrong decisions. So far, I've been taking money off the table and then buying the dip, and then taking money off the table and then buying the dip, guys. And that's a flip flop of emotion, because the one day I'm feeling confident and buying the dip, and the next day I'm not feeling confident and I'm trying to take money off the table. No realized losses so far. Well, a little bit, but it's been covered by gains over the last month or so. So I'm kind of about $100 down for the last month or so, guys, and realized gains. That's nothing to write home about. But we'll have to see how it goes. I've exposed the account to about 10% cryptocurrency, and they've been dropping as well. And the reason for getting into the crypto was that we might see that as a safe haven, and obviously not. So we'll see how we go. I'm certainly not going to dump everything and take a big hit and then try and buy in again in a few months' time. That's not what I'm going to do. I'm going to ride through it, guys. And I've plenty more reserves to put into the account. This eToro account's about $25,000, guys. So I can certainly top the account up if we do continue to drop, and then we decide to buy the dip several months down the road. That's a plan. I could always do that. Okay, so that's the stock side of things. And the reason I say all that is, if you're trading currencies, guys, you're not being affected by this. Particularly if you've got good stop losses, and yeah, you'll lose the odd trade, but if you're trading it properly, you're not getting affected by this, guys. Right, so let's get on with the currency. We're starting to see reserve banks becoming more hawkish because of inflation. Initially, as we know, Chairman Powell said that the inflation was transitory and would work itself out. Well, clearly that's gone. And he said last week, we've got to get rid of that word because it's not transitory. And they're now tapering. So everything now is about how fast do the taper. Obviously, Omicron's been chucked in the middle there, so that will affect decision making, but we're not in a position yet to see which way that's going to go. Hopefully it becomes a nothing, and then we could see a bit of a boost up to the stock market. But in the meantime, Fed are tightening. They're going to be increasing interest rates next year, guys. The job numbers last week in the US weren't great, but they were positive. They didn't come out as forecast, but they were still positive. The unemployment rate is better. Can't remember the exact number off the top of the head, guys. So the dollar, I think, will continue to go up on a higher time scale. Obviously, there will be drawdowns, and that we should see as setups to trade long. And we'll look at all the charts in a moment, guys. As far as the pound's concerned, not as buoyant as maybe what the dollar would be, but we may well see an interest rate hike in the UK, if not this month, which I think was planned. But Omicron maybe put that on the back burner for a month. But we will see movement in the interest rate. in the UK. Whether we get a big boost to the pound or not out of that, I don't know. You would imagine so, but it's not a guarantee. The end's a strange one because obviously it's been getting a boost of the drawdown, a boost from the drawdown, should I say. Um, so possibly we saw the bottom of the end for the medium term, and there's also been a lot of hedge fund managers, etc., talking about the value of Japanese stocks, particularly the car industry. So you might see some money going that direction, which also boosts the yen. CAD, I think the CAD will be all right, and it will continue to go up. But we need to keep an eye on commodity prices. If oil continues to go up, now when I say that, I'm talking about a bit of a longer term, guys. Into next year, the oil price will continue to go up. What's going to happen this month and next month, I don't know, obviously, but we'll keep an eye on that on a daily basis and look for opportunities in the CAD. Euro will do the opposite DXY, guys. And that'll do for the meantime. Let's crack on. Aussie, New Zealand, obviously linked to commodity prices, particularly Australia, but also New Zealand. And then over and above that is tourism, which New Zealand gets a good boost of. Australia gets a lot of tourism, but much bigger economy, so it doesn't affect it as much. And that's off the top of my head, by the way. I need to look into that. Okay, let's stop yammering and get on with it. As you know, we called the yen short on the way back up here, and then we get into this, which we weren't sure. We thought initially when it came to here that it might bounce back up, and then as it broke and we got this, we said, all right, this is looking like a running flat, and therefore we should get the other side of that, which we started to get, and then we got Omicron, and that was the reason that's the thing that triggered the sell off in the markets. But the markets were looking for a reason to sell off, guys. The inflation headwinds, the feeling of euphoria had started to fade and has gone now. Probably euphoria being replaced by fear, which is the reason why we may see further drawdowns. We did say last year that the growth stocks were all way, way, way overpriced, massively overpriced, guys. But I went and looked at my account there, and I have a lot of tech, guys, about 27% of 70. So say 20% of the account. That's a rough number. So 70% of 27, and I don't want to start working it out. So we're saying approximately 20% of the account is in tech stocks, guys. How did I end up in tech stocks after saying it was so overvalued? Well, they kind of did this, and they did something like that. And when you look at the individual stocks, not talking about the index, so I started buying different stocks, but they've done that in the meantime. So that's drawn me down. But the hope is that at some point, they'll bottom out and they'll go back to being growth stocks. And into next year, we'll get that back plus, and they may at some point get back up there, although I wouldn't hold my breath for that, but certainly get back into a zone where we can take some profits or at least consolidate our position in them. So that's part of the reason I've been drawn down, guys. Worse than what the index looks. But everybody's in that position. It's just degrees off. I went and looked through different people that I keep an eye on in eToro. Some of them are down 25%, guys. Some of them are down 2 or 3%. But down 2 or 3% from being up, 8 or 9%. So I think I'm down about, could be down 10% by now, guys, which is horrible because we were 9% up, 10, 11% up going into this last quarter. And we were looking to hit, as close to 20% for the year as possible. And now let me just go and check. Let me check and see where the account is. Okay, there you have it, guys. Battered the last. Listen, this was a difficult quarter here. Obviously, the first 6 months were fantastic. This was a bit flat, regained. So right up to here, we were kind of, on course for moving ahead. Maybe getting 15% for the year, and then these last 2 months, guys, and we're only on the 6th of December, guys. Absolutely battered. That is worse than the whole of the year before, and the year before, and that's worse than the year before that. So we're now down 5.51% from being 10, 11% up. I remember being 11 point something up over here. So that's a swing of 16%, guys, which has been put on this last quarter, which is horrible in here. But there you go. The important thing is they're all open positions, guys. So far as closed positions are concerned, we're up, but as far as open positions are concerned, we're down. Okay, let's get on with it. Right. Possible upside to the yen. I'm not 100% sure that Omicron may well have a say in that. And therefore, I'd be wary of trading the yen until we get a better idea of what's going on. I don't like going from, hey, this is going short, to all of a sudden calling it long, guys. Let's give it a little bit of time, and then we'll make up our mind if it's changed direction. DXY, I'm pretty sure it will continue to grow. Worst case scenario, it'll run flat. Does that mean it's going to go long from there? No, not necessarily. It could well consolidate a bit more here before going, but I do see upside to the dollar. That means I see downside to the euro. Does that mean it's definitely going to drop today? No, it doesn't mean that at all, as you all should know. Possibly it could push up, as we were indicating the other day, before it drops, but I would say that would be the direction to try and trade it. If I'm wrong, I'm wrong, but that's my thoughts on it. As far as the pound's concerned, I wouldn't try and trade it against the dollar. Could go long, but short. But there are better options because of but because of the possibility of interest rate hikes on the pound. This could end up running flat, guys, which is what we were indicating over there. Aussie continuing to push down. Of course, you'll know what my problem with it is that once something goes that far, you're looking for a correction. I don't know if we're going to get it, and I certainly wouldn't want to try and trade it. But if we got it, then I might look to trade short. It's interesting that that's continued to drop, despite the fact that DXY has been doing that, guys. So it shows you the continued weakness in the Oz, and the New Zealand's the same. We're getting that on DXY, as we just saw, and yet this is continuing to push down. So yet again, continued weakness in the New Zealand, probably, as I said earlier, connected to commodity prices dropping. CAD, yet again, you're getting a massive pullback. This is almost the opposite, because the base is the other way around, guys, and therefore you're getting this on the CAD yet again, largely commodity based. Oil's been dropping, but it will consolidate and it will push longer, guys. So there will be an upside to the CAD, but I just don't want to trade it against the dollar, guys. If you're going to trade the CAD against something, then look for something else to trade it against. US Swiss, yeah, this does reflect the pullback on DXY, and possibly we're starting to get a little push up. Is it worth getting into that? Possibly. There could be a bit more downside to it if the dollar decided to correct a little bit more, but I would say, there's a fair chance it'll come back up into that level. US Swedish, this is always the canary in the coal mine. It kind of moves against, or sorry, it moves. It, what's the word I'm looking for? It's a little bit more volatile than the other currency pairs, and it seems to lead the way when you're getting a breakout in the dollar or you're getting a pullback in the dollar. Often this it leads the way. I can remember back here thinking it was going to break out, but being wary, because when you have a situation like that, you've got to be wary that you don't get another leg down before it goes. Um, which would have been the situation there. You got the leg down, then it's gone, it's broke out. And then we had this and it's broke out again. Little pullback at the minute, double top in there. Possibly, if you wanted to trade that, and if you're in it, you know, get your stop to zero or take your profit, whichever one suits your strategy or your target. It's quite a nice pullback there. Remember, we're on 4 hours, guys. It's a little double top. Wouldn't be surprised if you got a little zigzag or a little flat correction here. Maybe breaks that bottom, and then that would be the time to trade it back up, which would correspond to potentially another leg down there in DXY and then up. Hope you're following this, folks. So I'm not saying that's going to happen. What I'm saying is if it did come to there, then that would be a nice place to get into this if you're not already in it. If you're already in it, then you need to think about where to put your stop loss, guys. And of course, it could just push on up through. It could just turn and go. Look, it could just do that. US yen. This is is that the old one? Yeah, that's the old one. I got into this last week, and then it dropped. But we were looking at this, and I suspect, even though it's the yen, guys, I suspect this is going to continue to push up. I say that with caution because I got it wrong 3 times last week. Not the same trade, just I took the yen. I took the yen long here. Well, not in this. In this, I took it long there. And obviously it dropped, and then I got out of it, which I shouldn't have done. I panicked. I should have just held on to it because I do think it will push up. Gold, possible little ending diagonal there, guys, going to push up. If the markets drop any worse, you could anymore, you could see. Let me use better language than that, guys. If we continue to get a drawdown in the stock markets, you could start to see a bit of movement into gold. There's a better explanation, guys. I'm a bit of a lazy. I don't know if lazy is the right word. I like to sweep over things, guys, but sometimes I need to be a little bit more clear. Silver will be something the same. It's continuing to drop. At some point, you could well see a reaction. The only way you would get this to continue to drop would be if there was a crash, rather than a correction. If there's a crash, leverage then takes everybody out, as we saw the last crash. But if it's a correction, you could well start to see money being taken off the table, and then real money as opposed to leveraged money, guys, and then start to get put into gold and silver. But that was also my bet with crypto, was that if people are moving to safety, they may well get into some crypto. Hasn't happened yet, guys, but let's give it a bit of time. Remember, I'm in gold mining companies as a hedge, which hasn't paid off so far, and I'm in SLV as a hedge, which hasn't paid off so far. So maybe some of these will start to pay off. Bitcoin. There's the drawdown in Bitcoin, guys. Flash crashed on Friday. Pretty sure it was Friday. Was it Friday or Saturday? The 3rd, yeah, Friday. Flash crash, bit of a recovery. I don't know if you jump in there with the view that it's going to do that, or whether you want to wait. for it to get down to the zone where I said it'd be a lot more attractive. The thing being, guys, these cryptocurrencies are very volatile. And if this were to correct back down the way it has in the past, go back to the daily here and then here again, and they don't look like much, but that's only because of the size of that move up. But if you get rid of those and then fib this, let's just fib it from zero, guys. You know, that was over 80% retracement, guys. And we've gone through this exercise before. And then this one, let's do it to zero again. So we're comparing apples with apples. That was 75%, let's say. So those are big corrections, guys. So if we do the same here, I'm not saying it's going to happen, but it has form. If that were to correct, you know, I'm kind of saying I'd be interested in that sort of level. And on a fib, that's kind of 50%. But could this possibly, could we go into another crypto winter with it coming down into this sort of zone before recovering a few years later? Because that was a couple of years. That was from 2018 to late 2019, mid 2019. That was a year and a half. Could we see another crypto winter? So then why would I be interested at that level? Well, it means if it does continue down, then, you know, maybe you lose 25% before it recovers, or get drawn down 25% before it recovers. Whereas if you get in here and it did that, then, you know, you could be looking at 50% or more before it starts to recover. And then why get in there? Well, if you think it's going to there, well, you don't know that it's going to there. If you wait for it to get to there, it could dip to here and then go. Of course, it could go from here, but that is a massive risk, which I'm not prepared to take on Bitcoin. I have taken the risk on several other cryptocurrencies, but some of them, for me, have massive upside potential as an actual useful currency or useful platform that I don't see in Bitcoin. But obviously, I'm still a novice so far as cryptocurrencies are concerned, guys. But from what I've learned so far, and I've mentioned it before over the last few days, we go up here. I'm more interested in Polygon, Algorand. Not sure what that one is. Oh yeah, I was in that for a little. Myota, Solana. So these are the ones that I'm looking at now, guys. And Cardano, sorry, as opposed to these big boys, which for me have already had their run. Now these have had massive runs as well, but you're still getting them at $185, 94 cents, $1.76, $1.67. So if these even went to $3, guys, you're almost doubling your money. This would have to go to 100,000 for you to double your money. So that's kind of the way I'm looking at these. Whether that's right or not, I don't know. Time will tell. Right. Let's get on. Ethereum, same thing. Pretty decent drawdown there on the daily time scale. Will not do that exercise again. There could be more downside to it. or maybe you think that's a place to. Guys, if you're going to get into these, get into them the way you would get into a stock. In other words, if you're worried that it's going to go from there, buy a little bit. If it drops, buy a little bit. In other words, take your position. If you're going to put 2% into Ethereum, then break it into 5 pieces or 10 pieces, and put 0.2% or 0.4% or whatever in each time. And then if it does drop, you've built up a position, and then you start to reap the benefits from down here. Or if it goes from here, then you're already in. You can get your stop to zero. The next time you get into it, you're not risking as much, because you've already got some skin in the game, as it were. So you need to have a think about that if you wanted to get involved in this. Oil's dropped quite considerably. It's come back into this area of support. Not that I trade those, but I'm aware of them. I wouldn't be surprised if oil ran flat for a little while and then broke out, guys. I can't see it going down there. EuroCAD. I'm still looking for this to drop because I'm looking for the dollar to go long, and I think the CAD will recover from where it is. Euro Oz, we've had this pullback. I said from there it would go. It said from there it would go. But well, not wrong both times, but certainly if you were trying to trade it on a 1 hour time scale, you would have been wrong. But I didn't say jump into it. I said let's wait for the dollar to start to go long, which means the euro in all likelihood will start to go short. And maybe that will be the time as it breaks down through here and this structure starts to break. Then we look for setups to trade it down. And of course, we've got the big question mark there. And it'll be the same with this one. Are we getting an ending diagonal in there? Let's try going down to 1 hour time scale. At that point, it looked like we were. But sometimes you get that with an ending diagonal, guys. You get this where you kind of get that and you think, bang, ending diagonal. And it does one more before it goes. Do you remember DXY when I called the ending diagonal on it the last time? Let's go to 4 hours. It did something like that in here. Do you remember me calling that as an ending diagonal and looking for that? I actually put possible ending diagonal in DXY. And there, I've had the arrow in for the divergence. And what did it do? Well, it put this in before it dropped. Now, the one thing I'll say about that was that I wasn't suggesting you traded it down. I'm pretty sure. I don't know. I can't remember back now. Had we already established that this was going long, and we were saying, well, there's a possible trade there, but the trend is still up. I think it was. I'm pretty sure it was. Should have said something in there. Did I say anything? Need to do more of these guys. Been saying that. Center going to running flat in a range between there and there. Structures like this will often result in a minimum 50% retracement of the initial move. Okay. So what would 50% retracement have been if we're going to call that? Where's this move from? From there? It would have been from there, wouldn't it? 38. Okay, 38. But that's handy having those. I need to put some more of them out. Okay, let's move on. Euro yen. That's been the strengthening of the yen combined with the weakening of the euro as the dollars moved long. Structurally, I would be looking for it to go long. Technically or fundamentally, I don't know why that would happen, guys. Euro Swiss, something similar. Structurally, you're looking for it to go long. It could end up just being, something like that. But that might even be where we're trading. Pound CAD, I would just leave that alone. Pound Aussie, well, I'm looking to trade this up, but I need a setup. Let's get into 1 hour. We were looking for a pullback there. Possibly, let's start of a little pullback there, though it hasn't really broken out of this little structure yet. But you would be looking for something like that, guys, and then try and trade that up. Pound New Zealand. Looking for the same thing, guys, but it's kind of in the middle of the range at the moment. So I have a suspicion that this will continue on up and then you'll get a correction. But I wouldn't jump in there, guys. If you're in from here, then put your stop to zero and hope that it pushes on up. Pound Swiss. Now there's a nice wee reaction, guys, which we were looking for. It's just about hit that, almost nicked around the edge. That's quite a nice move. And then combined with this, let's look at it in a 4 hour. Doesn't really tell me anything more. I don't know if there's enough there for me to want to try and trade it back up. If you look at how it's been moving, if you did get into, I wouldn't necessarily be getting into this and hanging on to it. Maybe get into it and take a 5% or 10% return. Pound euro. Well, you can see where the trend is there, guys. But it's not. Is it a reliable trend? The only thing I would say about this is if the pound gets a boost from the Bank of England at some time in the next month, they won't necessarily announce an interest rate decision this month. But if they get hawkish, you could see it move this month. And if the dollar continues long, which is what I'm expecting, then you possibly could see a move up here. I don't know if it would be sharp like that, guys, but certainly a move in that direction. And once you get into it and get away and get your stop to zero, then you're in a free trade and see where it gets to. Most of this is all about, guys, getting away from zero and then, hoping that things continue in the direction that you forecast. But if you can get it away from zero and get your stop loss to zero, that's the most important thing, guys, because then you're not losing money in the trade. That was a nice zigzag down. If it wasn't the yen, I've got these little doubts about the yen at the minute. Now, guys, way back there, you can see when we got that drawdown, because of how this thing had been moving, I was looking for this to continue to push on up. Obviously, with the zigzag, it's come back into that level. Can it possibly do that? Well, it can. Let's just see what's going to happen to the yen, guys. I'm getting the feeling it's going to go long, and therefore I wouldn't want to get into that. But technically, it looks like it wants to go long. And then Aussie yen, same thing, guys. We were looking for this to go long. This is one of the ones last week where I got into it at the wrong time. Got into it long and got hammered and jumped out. And thankfully I did jump out because it's just continued short since. So let's just clean it up a little bit. Yeah. I'm just going to take that off, guys. I don't know if that's a thing anymore. There's where I got in. Obviously, I'm out of it now, so we'll take it away. Got in there, and later that day, it dropped like a stone. I got out again. Aussie New Zealand. There's a nice little move there on the 4 hour. Is this the time to go long on the Aussie New Zealand? Quite possibly, guys. The only thing I'm a bit concerned about is it's still in this structure. So as it comes to the top of the structure and then it's going to go again, I don't know. I'd prefer to have got into it there. So in other words, that have been Friday, would it have been? 6th. No, that's last night. See, I often miss breakouts on this because they happen when I'm asleep, guys. So that would have been 6 o'clock this morning, actually. Now it pushed up and it's been pushed back down again. So I would love to trade that. I love to trade this. And I've been saying that I'm looking to get long in this because this seems to be at the bottom end of the range that this runs in, this pair. So just technically, it's at the right place for a potential breakout to run long. Look at that, and that, and that, and that, and that, and that. And even, you see that? There's a mini version of that going on there. Look at that one, look at that one. So it might be worth, I'm going to write that one down. Aussie, New Zealand. And then there's the interest rate decision as well. If they're hawkish, then you might see this go. Guys, there's nothing definite in trading. There's definitely nothing definite in currency trading, but you need a strategy. And if you have a strategy that you've worked out and it works, then it's about looking for the high probability situations or better than 50% situations. I don't know if that's high probability or not. That certainly looks, and that could be the market getting ready for an interest rate hike. Although having said that, I mean, look at that and look at that move, and then it petered out again. Tempting. Aussie Swiss. Another nice little move long in the Aussie. Aussie CAD. Not so much. But I never trade that anyway. I should actually take that off because I know nothing about it. Swiss yen. Ooh, is there a potential downside to that one? No, I'm not going to trade that. CAD Swiss. Nice little move up there. Possible ending diagonal. That is possibly a move long, guys. And by the way, if I take any of these, obviously I'll let you know. CAD yen. This is the only currency trade I have on at the minute. I got in here as this started to push up. Doesn't look like much at that level, but when we zoom in, the reason I got in, guys, is we had this structure looking for a breakout, started to move, got into it, and then of course it reversed. But my leverage is low, so I'm not panicking about it yet. We've had another move up. It's possible that it hasn't broken out of this yet. It could go a bit more, but just looking at it there, I'm hoping that we get a breakout on it. But that's despite everything I've been saying about the yen. I would possibly rather be in it there. New Zealand yen. There's also a little bit of a move against the yen, but I'll take that off as well because we put that on at the same time that we put the Aussie yen in, and then we got that drop. And there's a possible ending diagonal in there on a 4 hour. Let's see, 4 hour. See it? Not on a 4 hour, 2 hour. See, there's that little hump again. That's that drop, guys. That's the same as we saw in the Aussie Aussie yen. See there? That drop there, guys. Possibly going to go long. New Zealand yen, New Zealand CAD. Don't know anything about that. Should take that off. New Zealand Swiss. Looking for it to break out and run long, but wait for it to break. Wait for a reason for it to go long. Little bit wary of trading against the CAD and the yen, or not the CAD, the Swiss and the yen, because if the stock markets continue to push down, guys, which I don't know that they are, but if they did, then you would get another shock like that, and you don't want to be getting involved in that, or I don't certainly. So maybe leave that alone. Maybe the Aussie New Zealand guys. What was the other thing? Oh my goodness. Let me pause you. There was something else I fancied. Yeah, I think that's what it was. CAD Swiss and potentially CAD Yen, guys. And maybe pound, pound Yen and pound Swiss. They look like they want to move, guys, but if you get the drawdown in the stock markets, it could turn bad on you. So have a tight stop loss if you try to get into those. Okay, guys, that'll do for today. Speak to you all again tomorrow. Bye for now.